Na?
Okay.
Pranav, you can start.
Yeah, just a minute. I'll wait. Few attendees are logging in. Okay, a warm welcome to all of you. Good evening, all. So today we are on the third day of our 5-day GST workshop, and first 2 days were amazing. The faculties were good, and today also we have with us a very learned faculty, CA Vivek Baj sir. So, sir, I extend a warm welcome to you to take out your time, and in spite of not being well, you have made sure to come here and guide all the audience. So, really thankful for that. Also, I welcome CA Ajinkya Randive, sir, Managing Committee Member of Pune branch of WLC of ICI. Sir, from your busy audit schedule, you are here, and we have kept this wonderful topics for 5 days. So today is our third day of the topic. Just a quick announcement to all the participants. For fourth day, that is tomorrow on 25th of August, we were having a topic called as zero rated supply and refunds. And on 26th of August, on the last day, we have a topic GST precautions and implications. So the faculties for fourth day and fifth day are the same. Only thing is we have rescheduled it. So tomorrow, that is on 25th of August, we will be having the topic GST precautions and implications before closure of accounts by CA Ravi Somani sir. And on last day, that is on 26th of August, we'll be having the topic zero rated supply and refunds by CA Jignesh Kamsara sir. So only thing is tomorrow's topic will be covered on the last day, that is day after tomorrow, and day after tomorrow's topic will be covered tomorrow. The faculty and the topic remains the same. So all of you quickly note that. Now, without wasting much of your time, I'll quickly ask CA Ajinkya Randive sir to please address the audience. Over to you, sir.
Yeah, thank you, Pranav. Good evening, everyone. On behalf of Pune branch of WLC of ICI, I welcome you all on the third session of the 5-day GST series. Today's topic, recent amendments on real estate, including joint development and redevelopment. It is one of the most hot topic and hot area under GST because everyone has some confusion, some doubts, and need clarity. Our today's speaker, CA Vivek Baj, he is an expert in that, and I'm sure he's going to make the real estate very easy for you. So then, without wasting time, then I hand over to Pranav and we'll continue with it. Thank you.
Thank you so much, sir. So as rightly pointed out, GST and real estate, lot of confusions, lot of things, and a lot of amendments. Constantly, there are some new challenges which most of the chartered accountants into practice do face, and we couldn't have other faculty than C. Vivek Baj sir. He is a partner at ELP and a part of firm's tax practice for the last 14 years. He is a chartered accountant and has graduated from Pune University. In his 16-year stint with ELP and DMR, he has worked with various conglomerates, advising upon indirect tax-related issues, right from structuring and other things. He has even assisted various MNCs in advisory services from bonded warehouses, trade compliances, especially under the Indian export control regulations and various schemes of foreign trade policy. He has been advising various real estate clients in efficient tax structuring of the transactions and even related to anti-profiteering investigations. On the litigation front, Sir is supporting and representing several companies on investigations carried out by the Directorate of Revenue Intelligence and DGGST Intelligence. Alongside, he is also representing various clients before the advanced ruling authorities to seek clarity on various interpretational issues like classification, applicability of GST, availability of ITC, and other things. On the customs front, he has successfully obtained orders from special valuation bench, accepting the price declared on the invoice as well as the accessible value. So, yes, he has been at various forums and has even written topics on various indirect taxes to different newsletters. So it is indeed our privilege, sir, to have you here. So I hope this particular session would be enlightening, and we already have last 15 minutes for Q&A session. So if any of you have any doubts or any questions, you can definitely put your questions in the Q&A window, and we'll try to address all your queries at the end of the session. So yes, over to you, sir.
Thank you, Ajinkya, Pranav, and ICI, and good evening to all of you for inviting me with respect to giving session on recent amendment COA 47 GST Council on real estate. In addition to that, also wanted to cover the aspects of JDA and redevelopment. So, in my session over the period of 2 hours, I would like to cover four baskets of GST, which are where there are burning issues and interpretational issues going on across the industry. I have divided the session in four sessions. One is recent impact of amendment, be it with respect to 47 GST Council meet, or the landmark judgment called land deduction, as well as sale of developed plots. Society redevelopment, be it with respect to self redevelopment or through a developer. Joint development arrangement in brief, because we have been discussing this JD arrangement since over the period of 5 years. Every time whenever I am asked to speak, definitely I am covering this JDA part for sure from the developers as well as landowners perspective. And last but not the least, with respect to ITC core commercial project, because that is the huge cost which people are facing when they are into this commercial leasing business. So, first basket is with respect to impact of recent amendment. Now, the most important amendment which has been announced with effect from July 18, 2028, uh, is qua the subcontractors. As you are aware that all these special projects, be it infrastructure project, be it affordable residential apartments, or the project which are covered under Jawaharlal Nehru National Urban Renewal Mission or different schemes of PMAY, and most importantly, the single residential unit. So wherever builder are providing this sort of a project, and the subcontractors who are providing these services for this project, be it those which are covered under 35DA, 35A. I am specifically mentioning these entries because these are relevant when we get into the another other slides and other amendments of 47 GST Council. Now, as you are aware that whosoever subcontractors were providing services prior to 18th of July 2022, with respect to all this project, they were supposed to charge GST at the rate of 12% and not at the rate of 18%. So first and most important aspect from all our perspective is, when we are doing GST audit, when we are doing when we are reviewing even the financial transaction of our builders, if we see that prior to 18th of July, if subcontractors are charging 18%, which we have been observing because of maybe a notion that the most of the services are liable for 18%, but with respect to these services, there is a concessional provided by the authority prior to 18 July 2022, and they were not supposed to charge GST at the rate of 18%, and contractors were supposed to charge GST at the rate of 12%. So when we are doing all this audit, when we are reviewing all this transaction, we need to first see whether the subcontractor is charging at 18% or 12%. A. And B, if our clients are subcontractor, then we need to see on their output side, are they charging GST or are they paying GST at the rate of 18% or 12%? If they are charging GST at the rate of 18%, two important implication with respect to that. A, as you are aware that post 1st April 2019, no GST credit is available to the builder. So it is a straight away cost. And B, under anti-profiteering provisions, authorities can ask subcontractor that on account of rate, you had not passed on this benefit to the respective customer. So it is our responsibility to highlight all our builder clients as well as all our subcontractor clients. Now coming to the amendment, this entry got omitted. Now what is the impact of omission of all these entries under the concessional rates provided to the subcontractor? The impact is whichever scheme the builder is into, be it affordable, be it various entries which we have mentioned, which I have mentioned, be it 35A, 34B, 34C, single residential unit, housing project approved by specific authority, all these projects, if they are providing, okay, post April 18, the GST rate applicable for all these contractors is 18%. Now, there are two important things which we need to see. Prior to 18th April, are they charging 18%? If they are charging 18%, then differential rate, you should immediately file a refund application. A, for maybe 1 year, one year, considering the limitation for filing the refund application. B, post this amendment, subcontractors should not charge GST at the rate of 12%. They need to charge GST at the rate 18%. The reason for that is this entry has been deleted. This is the first and foremost impact as far as all of us are concerned when we are reviewing these transactions or when we are advising either to developer or to the subcontractors. Okay. Now, because of this amendment, there are two peculiar issues or peculiar impact which has been uh, the discussion point across real estate sector as far as applicability or impact of this amendment for real estate business are concerned. Now, as you guys have seen that the rate has been increased from 12 to 18%. तो क्वेश्चन आएगा कि अभी whether I have provided services prior to this rate, whether I have provided services after this date, if I have raised the invoice prior to this rate, if I have already received the advance, what rate should be applicable to me, right? Because this is the most important fees as far as applicability of rate is concerned. So when we are advising it to all of our clients, we should take utmost care that they should not charge a wrong levy. If they charge 12%, then there is an exposure of 6% along with the interest and penalty. And if they charge 18%, so it is unnecessary cost in the system and differential tax we are additionally paying it to the government. The benefit is neither for the developer nor to the consultant and of course not to the person who are buying the flats. So therefore it is important for all of us to understand what rate should be applicable. Now if you see in overall transaction, there are three events which are happening. A, supply of goods or services. B, raising of invoices, as it is a continuous supply of service, so raising of invoices would be as per the contract. And C, the receipt of payment. There might be a possibility that advance payment by the developer or advance payment by the customers or advance payment by advance payment has been received by the subcontractors. In all these aspects, we need to see what rate should be applicable. So as a thumb rule, we need to divide this into two baskets. One, after 18th of July and before 18th of July. Whichever two events are happening prior to 18th of July, then if the two events are happening prior to 18th of July, then old rate would be applicable. If the two events are happening post 18th of July, then new rate would be applicable. This is the thumb rule which everyone should follow. If you follow this rule, then there would not be any confusion with respect to the applicability of rate. For example, I have provided one table by way of which I have tried to simplify this confusion which is going on in the industry, ki what rate should be applicable as far as these transactions are concerned. This table is based upon section 14, where the time of supply provision has been provided. Now, A, if supply of goods or services is before change of rate, okay, for example 18th of July ke pehle, if the contractor or the developer has provided the services. B, second, raising of invoice is happening after change of rate, because it's a continuous supply of service, so there might be possibility that based on the contractual terms and condition, he needs to raise the invoice post 18th of July, even though the services has been provided. And as the invoices has been raised post 18th of July, of course, the receipt of payment would automatically follow as after change in rate. Then what would be the rate applicable for the subcontractor? As in the first line of example, two events are happening post 18th of July, the new rate should be applicable. In the second scenario, supply of goods or services is before change in rate, but raising of invoice is also happened before change in rate. For example, 18 जुलाई के पहले सर्विसेज भी दे दी, 18 जुलाई के पहले इनवॉइस भी रेज कर दिया, बट पैसा आया जुलाई, अगस्त, सितंबर, अक्टूबर, whatever you called it. Then what rate would be applicable? Then of course old rate would be applicable, because two events are happening pre amendment date. Okay. Another example, services has been undertaken prior to 18th of July, which is the date for our transaction, but raising of invoice is after change in rate. But most importantly, the third scenario, which is receipt of payment, there might be possibility that the customer or the developer have given this money prior to 18th of July. Considering, there is an amendment in the rate, or there might be another scenarios as well. In that scenario, as two event, supply of services as well as receipt of payment, they are occurring pre-amendment. Therefore, old GST rate should be applicable. Likewise, if you see my table, I have covered most of the permutation combination with respect to this. Most importantly, if the payment condition, you need to see as it has to be credited in the bank account within 4 working days. That's how you need to see the receipt of payment. From which date? 4 working days from the date of change in the rate of tax, that is from 18th of July. If the payment is received on or before 22nd of July, then receipt is happening before change in rate. Otherwise, it is after change in rate. Okay. It shall be deemed to be that the same has been received before change in rate of tax. So this is the most important slide as far as rate of tax is concerned, and we need to advise all of our clients appropriately so that there should not be any exposure to tax, and at the same time there should not be any leakage of tax as far as rate is concerned. Okay. Now second most burning issue which is going on as far as this amendment is concerned is the effective rate qua this sort of the affordable project. As most of you are aware that when prior to 1st of July, 1st of April 2019, this ongoing project, the effective rate post land deduction, of course, in terms of the notification, the rate is 12%. But if the builder is providing affordable housing, or if the builder are providing other scheme where the concessional rates are applicable, now post this amendment, whether this 8% effective rate would be applicable qua all these schemes which are going on, which are going on as far as these residential projects are concerned. Why this ambiguity has arisen across the industry? The reason for that is, as I have mentioned in my earlier slide, all these entries which are provided, or all these projects which are provided under 34DA, 34A, 34B, 35A, 34CD, 35A, this has been deleted from the notification per se. So the interpretation which is going on, as these entries which has been mentioned in the description of service, they are no more in the list per se, then this 8% effective rate would be applicable, or it is not applicable, because uh, as such this entry is getting redundant, and we fall under the residual entry and liable for maybe 12% as far as these ongoing projects are concerned. So it is very important for all of us to understand the principle behind this, A, and how to interpret the amendment which has been provided under the law. Now this entry 343536 of the rate notifications has been deleted, whether the benefit of concession 8% would be applicable on ongoing project. Now, if you see, there are various Supreme Court rulings wherein it has been discussed and upheld by the Honorable Supreme Court, that there is a concept called reference by incorporation. What does that mean? Whether a statute is incorporated by reference into a second statute, the repeal of the first statute does not affect the second statute. If you read it, you would get a little bit confused. What does that mean? If you see this entry, they have just given the reference of other line entries which has been prescribed under the notification. If those line entries has been deleted, where the intention is to give the concession rate to the subcontractor, that doesn't mean the builder, the concession rate applicable to the builder will also get omitted. That is the way we need to understand the law. Only the reference has been deleted, but the purpose and the intention of the law still continues to give that sort of a benefit to the builder wherever they are providing this sort of a project to their customer. And 8% ideally, in my view, should be applicable, and the benefit of the concession rate should be continued. If you read carefully, this Supreme Court ruling of Awas Ivam Vikas Parishad versus Jainul Islam, as well as Nagpur Improvement Trust and others versus Vasantrao, these are the landmark judgment wherein they have specifically stated that in a case where a statute is incorporated by reference, in this notification they have just given the reference into a second statute, the repeal of the first statute by a third does not affect the second, right? if they have if they have repealed this, if they have deleted this, that should not affect this line entry, and the builder should continue to charge 8% effective rate to all the customers as far as their ongoing projects are concerned. So whenever we are giving advice to all our builder clients, we should be ultra careful, and they should continue to charge GST at the rate of 18%, at the rate of 88%. Okay, uh, if you take the land deduction of one third, then effective rate is 8%. So these are the two utmost burning issue which was going on, or talk of the town, post this 47 GST Council notifications, where there was an interpretational issue going on across the industry as far as these two amendments are concerned. Moving on, with respect to the another most important aspect, and this was a very welcome move, not only from the real estate, across the industry, the clarification and the clarity which they have provided qua liquidated damages. It's a very long notification where they have given the principle as far as applicability of GST is concerned, qua liquidated damages. I will not touch upon the other aspect of liquidated damages, but will definitely cover which are related to real estate. Okay. But before we get into which are the impactful point for real estate, we need to understand the principle of the clarification which they have provided as far as applicability of GST is concerned. This was always a contentious issue whether GST is applicable qua this liquidated damages, or in a layman language, or whenever we are going this language, you generally see that tolerance of an act or agreed to refrain from an act, whether service tax, it was there under service tax regime as well, whether service tax is applicable or not, whether GST is applicable or not. Uh, Considering there was always a interpretation issue with respect to the applicability, we had filed so many representation on behalf of so many industry, because each industry is facing a different sort of a liquidated damages aspect, uh, and government were kind enough to consider most of them, and they had come out with some guidelines as far as liquidated damages are concerned. Now, if you see, if the um, if the taxability would be dependent upon your clauses of the agreement which has been provided between the parties. Therefore, it is utmost important for us how we draft an agreement between contractor and developer, between subcontractor and contractor, between developer and any other third party, and cover all this aspect so that there should not be any GST implication as far as as far as this applicable this levy is concerned. Of course, the if the levy is of a penal nature, then GST would be applicable. If the levy is not of a penal nature, then they had considered that there is no supply per se, and therefore GST should not be applicable. Now, if we just focused on this slide, there are 3-4 important aspects which we need to understand before we give any advice to the client qua applicability of GST is concerned. Now, if after we understand this, uh, we need to review the transactions of all our client, and two important things which we have to do. A, with respect to past transactions, we need to identify those transactions, we need to quantify, and we should explore an option of refund based on this circular, that GST per se should not be applicable if GST has been paid. And B, post this clarification, we should advise client that they should include appropriate clauses in the agreement, and they should not levy GST, at least henceforth onwards, so that overall cost of the construction would definitely get reduced. A, now key clarification, services such as agreeing to tolerate an act or agreeing to refrain from an act should be a contractual arrangement, that is between two parties, one of which expressly or impliedly agrees to do or abstain from doing, and other party agrees to pay consideration for it. If this is specifically provided in the contract, then only GST would be applicable. Otherwise, GST would not be applicable. For example, non-compete agreement, right? Two parties are entering into or are bidding for one of the contract. There might be possibility that one party out of the two party may discuss uh, officially or unofficially for that matter, and say that you don't bid this contract, I will pay XYZ amount. Okay. If it is form of contractual agreement, then there is a GST applicability. If it is not, then GST may not be applicable on this. Okay. Necessary and sufficient nexus between supply and consideration. For example, there's a notice pay recovery. As such, there is no nexus between supply and consideration. employee is not providing any sort of a services. Therefore, this sort of a services, this sort of a transactions are out of the purview of GST. Okay, they are not supposed to pay GST on this transaction. Services contemplated under para 5e. What do you mean by para 5e? This tolerance of an act or agreed to refrain from an act cannot be presumed to exist just because there is a flow of monetary money between two parties. Okay, they just can't take a presumption and apply GST with respect to that. Liquidated damages for breach of contract is not a consideration per se. Okay, and therefore and is a penalty for discouraging such act. Therefore, GST should not be applicable. And last, for taxes to be levied, such payment must be an independent activity of tolerating an act. If it is an independent activity, then only GST should be applicable with respect to this liquidated damages. These are the basic principle which they have laid down under the clarification. And based on that, what would be the impact on real estate per se as far as GST is concerned? Okay, now if you take one example, that is builder is refraining from constructing higher floor against a compensation from the neighboring project to protect its sunlight. We can see these are practical issues which we are facing, which builder are facing, and they give some amount to the other builder, okay, and request them not to construct higher floor building, and for doing this they are ready to pay some amount. In that scenario, as these are not in penal nature, that these are per se a facility which has been provided by one builder to another builder, and that is the reason this sort of a transaction, wherever they are receiving some amount, that is liable for tax. Okay, second, third and fourth, which is very very important, where people were paying GST over the period of 5 years with respect to this sort of an activity. Now, based on this circular, which is binding on the authorities, they are not supposed to pay GST. B, liquidated damages for breach of a contract, unless it is an independent activity of agreeing to refrain from doing an act or tolerating an act. If there is a breach of a contract, for example, quality, there is a bad quality provided by the builder or subcontractor, they were charging some charges. On all those charges, it were covering under the definition of tolerating an act, and people were paying GST. But now, post this clarification, they were saying per se it's not an activity per se, it's not a supply, because no one intend to provide bad quality product, bad quality services, and that is the reason this sort of an money which has been received are not liable for GST, because there is no supply per se. Penalty paid by the developer for delayed construction of house, because no builder intend to delay the construction activity. Likewise, no subcontractor intend to delay the construction activity. The reason for that is their money is also blocked, A, and B, their reputation is also on stake. So no one wants to do a bad work, and that is of course not the intention of anyone. And because of this sort of a default, if anyone is paying penalty, then GST is not taxable. So whenever the amount is in the penal nature, GST should not be applicable. Forfeiture of earnest money by the seller in case of a breach of agreement to sell an immovable property, of course not taxable. Last, which is not in a penal nature, it is a facility provided by one builder to or tenant to the builder. That is termination fee for early termination of lease of immovable property. See, these are the peculiar example which they have given under the circular, which I intend to cover. Okay, but we can very well take the analogy, we can very well take the rationale and apply uh, to to our day-to-day activity, and accordingly take an interpretation or take a position where GST is applicable or not. Okay, so this is the second most important amendment which has been issued, or which has been provided by 47 GST Council meeting as far as real estate is concerned. very burning issue, very much a burning issue. Of course, they have given some clarification with respect to that, but according to us, or this sort of a clarification may not suffice the litigation or ambiguity which is going on across the industry as far as sale of developed plot is concerned. Per se, if you see what are the sale of developed plots which are going on across which are going on in the real estate, generally what landowner does the development activity, be it with respect to land leveling, be it with respect to drainage, be it with respect to water pipeline. All this activity he needed to do, because if he doesn't do that, he will not able to sell the plots. You will agree on that. Okay. Now, when they execute an agreement with the customer, the time of the agreement may differ. They can execute an agreement with the customer either before or during development. Okay. Then what would be the GST implication with respect to that? And B, they may execute an agreement with the customer after all this activity and sell this developed plot to the respective customers. Now, what would be the GST implication with respect to that? Okay. Now, if you see, just I know everyone are aware of what is the definition of a supply, what is the definition of a goods, what is the definition of a services. But in the context of a sale of developed plot, just wanted to highlight that if you read carefully the definition of a supply, it is all forms of a goods or services such as sale, transfer, barter, exchange, lease, rental, lease or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. Now, importantly, goods and services. What do you mean by goods? Every kind of movable property. If it is not a movable property, then of course it falls under the definition of services, because the definition of service is very wide enough. That is anything other than goods. Okay. But at the same time, it is important for us to read Schedule 3 transaction, which is not a supply per se, wherein they have specifically mentioned sale of land, okay, and sale of building. They are not at all a supply. That is the reason I have included this slide per se. In this sort of a transaction, the nature of transaction is not getting changed. They are effectively selling the plots. They are effectively selling the land. Then why there should be applicability of GST per se on this sort of a transaction? Okay. Now, there are different sort of a ruling qua this sale of developed plots. Gujarat, sorry, Gujarat AR or Madhya Pradesh AR, what they are saying is sale of developed plot is not equivalent to sale of land. They are saying you are doing ancillary activities, you are doing this labeling, you are taking approvals on behalf of the customers, you are doing so many activities with respect to this, and therefore GST is applicable qua this sale of land to the customer. Another set of ruling which talks about sale of developed plot after completion of development activity is equivalent to sale of land, and therefore it is covered under Schedule 3 and not liable to GST. Fair enough. The reason for that is whatever activity you are doing till the completion of development activity, you are doing it for your own. You are not doing it on behalf of customer. Therefore, you are not providing any services to the customer and not liable for GST. Now, important point here is, as you see with respect to residential apartment, you get a completion certificate from municipal authority. But as far as development activities are concerned or sale of plots are concerned, you don't get any sort of a certificate per se from the local authorities, which talks about your project has been completed and you are not supposed to pay GST on this. Okay. Now, recently, what I have seen personally, GST authorities have investigated and demanded GST based on this ruling per se. Okay. And I have seen most of the builders have paid GST under protest, and they are fighting this issue per se before the various judicial forums. Now, because of the nature of transaction per se, it's a nature per se, it's a sale of land. We had filed a representation, various representation before GST Council, and they were kind enough to consider that. But unfortunately, when they have given the circular, they have given the circular only with respect to sale of land after leveling, laying down of drainage lines activities, etc., is taxable under GST. What they have stated that if you are selling this after that, then per se GST is not applicable. But the clarification with respect to pre-development activity, for example, first leg of transaction before or during, those ambiguity is still open. Now, assuming for a moment, if I am supposed to pay GST on this, now question number A, on what value I am supposed to pay? As you are aware that GST is not applicable qua sale of land, and it is unconstitutional as well if they levy GST on land per se or on the value of land per se. Okay. Now, as there is a one agreement which has been executed between the developer and customer, which includes development activity as well as value of land, on what value I am supposed to pay GST? A. B. What would be the rate applicable to me? Okay. Am I supposed to pay GST at 18%? Am I supposed to pay GST at 12%? Am I supposed to pay GST at 5%? Because 5% is only applicable for residential. If you see 12%, then under which category or which line of notification which allows me to levy GST at 12%? And if it is at 18%, then you effectively I am paying GST even on the portion of land. Okay. So these are still the open-ended issue with respect to applicability of GST before or during the development of land. And second, what would be the rate and valuation of such services? Wherever we are facing this issue, my advice is we should immediately approach AR and get some clarity, or otherwise, again, if authorities are issuing any notification or they are demanding any GST with respect to this sort of a transaction, we should immediately approach to writ court and challenge the levy per se. Okay. Now, when I will get into the another aspects of this land deduction, you will also understand that this Gujarat High Court ruling, qua Munjalal Manshibhai Bhatt, where they have specifically stated that authority does not have power to levy GST on the land. Now, with respect to this sort of a transaction, how will I determine the value of land? Should I take market value? Should I take municipal value? Whatever value I will take, tomorrow authorities will definitely raise the concern and 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 uh, and ask me to pay GST. The reason for or make an allegation that companies or developers have offloaded the value of development activity on the value of land, and therefore on a differential value, builders are supposed to pay GST for the development activity, right? So it is utmost important for us when we are advising to the client whether we should pay GST only on development activity. if we are paying only on development activity, what value we are considering? What if we are considering maybe a transaction value, or maybe a cost of services plus 10%? I'm just hypothetically giving you some valuation mechanism which has been adopted by the authorities over the period of time, and charge 18% on that. We should definitely caveat this sort of a position before all of our clients, because definitely litigation is under the radar as far as these transactions are concerned, unless and until we get any clarity from the developer. This is a very welcome ruling from Munjalal Manshibai Bhatt from the Gujarat High Court. Now, I'll just brief you the facts of the case. What was the fact of the case? Uh, the petitioner entered into an agreement for purchase of land and construction of a bungalow thereon. Here, the agreements identify the consideration for land and construction services separately. Okay, most importantly. Now, the issue before the Honorable High Court was whether the standard deduction of one third of the price towards land in case of valuation of construction service is applicable, and if it is applicable, is it not a violation of Article 14 and ultra virus to Article 246A of the Constitution, because the value of land which has been mentioned in the agreement is much more than the one third price which they have considered as a deemed deduction. As far as value qua land is concerned, with respect to the residential project as well as with respect to this sort of activity is concerned. So what High Court has considered all the submissions which has been provided by the petitioners, and they have come out with the ruling stating that one third deduction towards value of land is ultra vires GST scheme and violation of Article 14. Very important judgment from the other aspects of the real estates are concerned, and such provisions should be read down and should not be mandatory and shall apply only where such value is not ascertainable. Okay. Now, what they have stated is Section 15 provides that valuation of supply would be the price actually paid or payable. Where such price is available, GST is to be levied on actual value. What does that mean? If I have a value of land and I have value of construction services, if actual value is provided, then you should levy GST only on actual value of construction services. You should not come up with the deeming fiction of one third value of the land. Okay. Mandatory application of deeming fiction towards the value of land is of course then ultra vires the statutory provision, and deduction contemplated only in the context of flats wherein it was difficult to ascertain the value of the undivided share of land. What they have stated that only with respect to the value of flats, where when the builders are selling flats under construction to most of the customer, where the value of land and value of the construction services has not been specifically mentioned, only to that extent one third deduction is available. But wherever there is the value provided, then in that scenario this deeming fiction should not be applicable. Very welcome move, but there are open issues with respect to this aspect as well. Which are the open issues? Can developer claim deduction of actual value of land? Because if that is the ruling, then developer will say, I will specifically mention the actual value of the land in the contract. Applicability of judgment, where bifurcation towards land and construction services is not provided in the agreement. And C, as ruling has been stated that you need to have a specific value towards the value of land, then what should be the value? Be it reckoner value, be it market value. It is still open-ended, but as far as other than Pune is concerned, where value of land is definitely much higher, be it Mumbai or be it any other place for that matter, specifically for Mumbai. If we take this sort of a shelter of the ruling, and if we do the actual working of the value of land and value of construction services, I think for the project where which are going on in Mumbai, and if we take this shelter, then GST impact on the overall project would definitely be minimum as compared to when we are paying GST after taking a deeming deduction of one third value of land, right? So when we are advising it to the client, we should definitely do this sort of a working. And if it is beneficial, substantial benefit is happening with respect to the actual value of land, then it is worth to explore this sort of a structuring, subject to, of course, the litigation is there. But if builder is ready to take this sort of aggressive positions, then definitely we should worth definitely it is worth to explore and minimize the GST implication on the project. Even though GST Council were kind enough to address the representations which has been filed, but there are still various issues. Amongst others, I have just provided 3 4 issues which are still open ended as far as real estates are concerned, where writ petitions representations has been filed and it is still pending. A, exemption to long term lease of land. You have seen that whenever our not builder but manufacturers, they are taking land from MIDC. These are all long term lease land. Okay, can you believe that the value of the land is equivalent to the sale of land? Okay, sale of land per se is not liable for GST, but as these are covered under the leasehold land definition, there is no exemption per se qua applicability of GST on this. So whenever your clients are buying any plot or any land from the MIDC and constructing any factory building, in that scenario, MIDC is levying GST at the rate of 18% on the value of land per se. You can imagine if the land is of 10 crores, the 18% would be 2 crores, if I'm not wrong, approximately, which is as high, which is directly cost as far as cost of constructing a new factory is concerned. A, B, unfortunately, the credit is also not available to the builders or to the manufacturers. So whenever this sort of a transactions, if we are seeing, we should definitely advise to all of our client at two level. A, we can challenge this levy per se before High Court, uh, and pay GST under protest, and uh, and and challenge that the GST should not be applicable on long-term lease. The reason for that is it is equivalent to a sale of land only, and which is not the intention of the law. And B, definitely it is worth to approach advanced ruling authorities uh, as far as availment of credit is concerned. If the because advanced ruling authorities, they are bound to provide the ruling within 3 months, but considering there is a pendency, we can expect the ruling maybe in the span of 5 to 6 months. But as far as amendment in law is concerned, it can take uh, any amount of time. That is the reason I'm saying, if we are approaching, we should approach AR ruling and request for availment of the credit. Even if we get this sort of a relief for our client, that is a very very welcome value addition from the client's perspective, because if they could able to avail the credit, then that should not, they will not mind paying this sort of a GST to the MIDC. So this is still open ended. Second, taxability of TDR schedule 3 to be amended to exclude benefit arising from the land such as TDR, FSI, etc. Here also we had filed the representation even in 2019. Thereafter, we got this exemption related notification. but as such they have not included under Schedule 3, and GST per se should not be applicable on this. This is also pending. See, valuation construction services provided to the landowner. This is also, we are suggesting that it has to be cost of construction and not to the extent of value of similar flats, because the value per se, the GST implication per se is huge as compared to cost of construction. Fourth, ITC construction of a building used for leasing shall be allowed, or GST on renting shall be reduced to 5%. This sort of a representation we had filed. You can imagine that all this Eon IT Park, or maybe on Senapati Bapat Road, if you see this ITC tower, all these are on lease. Okay. And while constructing this sort of a building, they had paid huge amount of GST on cement, steel, and other allied services. On the output, whatever leasing amount they are recovering, on that also they are paying 18% GST. Input also they are paying 18% GST. That is straight away cost. On the output, they are paying 18% GST. So this is a huge cost to them. A, and B, what we have done, if you are not allowing us the credit, then if you see wherever there are concessional rate provided to any sort of an activity, be it real estate or be it any other scheme as well, then if the credit is not allowed, then on the output side, the rate has been reduced to maybe 5% or maybe 8%. So this sort of a representations we have filed, and they are still under consideration. They are still under consideration. So it's wait and watch for all of us how the law will get evolved over the period of time with respect to all this ambiguous issue, and which are very, very detrimental from the real estate and from the developer as well as from the other manufacturers are concerned. If they throw some lights on this and give some sort of a relief, that would definitely attract investment from foreign countries as well, and will definitely boost the manufacturers to invest or to expand business in India, because these are the huge cost as far as their cost of constructions and cost of setting up of the projects are concerned. The second and most important scheme, which is very, very well known across real estate, which is society redevelopment. Okay. Now, if you see, I'll just throw the light on this slide, and we'll take 2 minutes of yours. Wherever these old societies are concerned, they are approaching developers and they are requesting for a redevelopment, or otherwise as well, where developers are approaching to to the society owners and requesting them for redevelopment. Sorry, before we get into this society redevelopment, would like to address if there are any concerns with respect to this recent amendments as far as real estates are concerned, the applicability of rate as well as GST is concerned, post this 47 GST Council amendments are concerned. I hope so far so good. Everyone is on the same page.
Yeah. Vivek, in the Q&A, there are 2 or 3 queries they have. So if you want, we can take them now or in the end.
We can take that right now as well, or maybe at the end. But as far as flow is concerned, or as far as ambiguity is concerned, I hope, or as far as pain area is concerned, I hope everybody is on the same page, and your issues or your confusion got resolved as far as these amendments are concerned.
I guess then we can take the Q&A in the end only.
No problem.
We can continue.
No problem.
Yeah.
No problem. Now, this society redevelopment activity, which are going on across cities. Okay. Now, if you see from a developer perspective, they are buying cement, they are buying steel, they are buying bricks, they are buying various raw material. Post this 1st April 2019, and if they are going under all this new scheme, whatever GST they are paying, it is straight away cost. Be it with respect to goods, be it with respect to services, and be it with respect to the subcontractors, whatever GST they are paying, uh, it is straight away cost. As far as output side is concerned, there can be two set of a transaction. One is the residential apartment, and another is affordable residential apartment where 60 square meter and 90 square meter or 45 lakhs, all this definition they have provided under the act, will not get into much of that, and this 1% is applicable. Builders are not eligible for any sort of a credit. So effectively, this is the tax structure which all the builders are following and all the subcontractors are following. Now, when the question comes up, as far as society redevelopments are concerned, four most important transactions are undertaking. A, society is providing development rights to the developer. Okay, and I'll get into all this transaction in detail because these are the most important transactions, and we need to understand the taxability as well as their implications are concerned from a GST perspective. A, society will provide transfer of development right to the developer, because without that, developer is not uh, going to charge going to construct the building unless and until they get the development right. A. B, developer contractor is providing services to the developer, because we have seen that developer per se himself doesn't do all the activity. He also subcontract this activity to the contractor. C, now developer per se, after constructing this residential building, they can sell this apartments pre-OC. They can sell this apartment to the new buyers as well as to the society members. Okay, these are the two important aspects as far as developers are concerned. Try to visualize all these transactions because these are very very important, and their tax implications are tax implications are different from the rate as well as from valuation perspective. Okay, so when the developer is constructing the apartment, either he will sell it to the new buyer or he will sell it to the society members. Okay, now when he is selling it to the new buyers, there are two important scenario which may happen. The developer may sell it under pre-OC scenario, or developer may sell it under post-OC scenario. Okay, now please try to visualize and memorize this four leg of transaction, because we will understand in next few slide what would be the GST implication, who is supposed to pay GST, at what rate he is supposed to pay GST, at what value he is supposed to pay GST, when the GST is payable, and whether ITC is available with respect to each leg of transactions or not. Okay, so far so good. Now, transfer of development right. Per se, over the period of 5 years, this has been always a contentious issue. The first interpretation across the consultants, they were bifurcated into two aspects. Few of the consultants were saying TDR development right was not liable per se, because it is nothing but it is a sale of land. It is like a land only. And few of the consultants were of the view that it is not falling under the definition of goods, and it is neither falling under the schedule 3, where they have specifically mentioned sale of land and sale of building post OC, because it's not a land per se. Okay, so if you are not falling under two aspect, then the residual is the definition of service which is other than goods, and that is the reason 18% GST was leviable. Okay, now history, you know that representations has been filed, and then uh, council has considered the representations, and thereafter they have stated that GST is leviable on transfer of development right, but still there is chances of of challenging this levy before the high court for sure. Now proposition 1, which industry different real estate players are taking different views with respect to this development rights are concerned. Proposition 1, uh, as far as academic knowledge are concerned, is transferable development right is a direct consequences of land. If you see, it is nothing but it's a land, and therefore GST should not be applicable. So there are judicial precedent with respect to that, which talks about these are the direct consequences of land. It is nothing but it's a land only. Proposition 2, it's very interesting proposition. Under GST or under any commercial transaction, goods, services, and immovable property, these are three different distinct species or three different categories. So you should consider these three different categories as a na- three different uh, positions with respect to all these levies are concerned. Goods and services, they fall under the ambit of GST levy, but as far as immovable properties are concerned, the central levy, central authorities, they are not constitutionally are supposed to charge GST on that. Okay, so these are the broad basket which has been divided under the constitution. Okay, goods and services are liable, immovable property, states are it is the jurisdiction of a state. So distinct, independent, and exclusive state of laws with respect to this, which talks about providing levy, collection, and assessment ought to be provided for each species. You will understand this, and you will appreciate as well. Pre-GST, goods were the forte of VAT and excise, services of service tax, and immovable property was of state levy and stamp duty was applicable. While framing the legislation, ought to follow this distinction as well. You cannot, uh, when the law has been framed, you there should not be any overlapping of the jurisdiction, overlapping or encroachment as far as levy is concerned. This is the proposition 2, and therefore development right per se should not be leviable. Proposition 3 is concerned, when levy is per se not sustainable, any attempt to levy or collect GST, okay, will run fall of the Article 265 of the Constitution. What is Article 265? No tax shall be levied or collected except by authorities law. If you see, per se, it is like an land. Therefore, GST should not be applicable, and therefore that is the reason the consequences of that is authorities are not have no rights to collect levy when the GST per se is not sustainable. Okay, attempt to levy GST on TDR is clearly in the teeth of Article 265. So, uh, first proposition, when transfer of development rights is concerned, these are the three and these are the three discussions which are propositions which are going on across the industry. Okay, now those who are not taking the aggressive positions, they are paying GST as far as uh, development rights are concerned. Now, who is supposed to pay? The promoter is supposed to pay under reverse charge mechanism in terms of notification 5 by 2019 and under 5A or 5B, which talks about services supplied by any person by way of transfer of development rights or FSI for construction of a project by promoter. And 5B is long-term lease of land by any persons against consideration in terms of upfront, whatever you called it, for construction of a project by a promoter. In terms of this, uh, the promoter is supposed to pay GST in as far as notification 5 are concerned under reverse charge mechanism. Now, even though in terms of this notification, promoter is supposed to pay GST, but there is an exemption available subject to the fulfillment of conditions. As most of you are aware, that if the same is transferred on or after 1st April 2019, and it has to be used for the purpose of construction of residential apartment, and most importantly, apartment in the projects are intended for a sale to a buyer whether wholly or partially. But if that is the three condition, if it is getting fulfilled, then GST is not applicable on development right. There is a straight away exemption. Okay. Now, GST is still applicable only to the extent of residential apartment which remain unsold. As most of you are aware that uh, per se, one view is no GST is applicable. That is aggressive position. If people are taking the position of GST is applicable, then in that scenario, upfront exemption is there under this notification number 4 by 2019, subject to the condition. If any of the condition is not getting fulfilled, for example, the flats are not getting sold pre-construction, then the question of payment of GST would arise. And at the same time, what would be the value which should be considered as far as payment of GST is concerned? Now, two important aspect which everyone needs to consider: similar fat value which is nearest to the date of transfer, that has to be considered. Okay, first transfer, we meant to say that multiply by development right. This value should be considered as a development right value. B, and of course that needs to be proportionately, we need to do the proportionate with respect to post OC, post OC flats. Second is similar value, flat value nearest to the date of OC. Okay. Now, when we are calculating the value as far as development rights are concerned, we need to calculate at two level. A, what was the value of the flat at the time of development agreement, first value of the flat, multiply by the number of square feet as far as development right is concerned. B, and of course that has to be proportionately reduced with respect to pre-construction, pre-OC flat sold. B is similar flat value uh, uh, which we need to consider at the time of post, the nearest date of the OC. For example, the date of OC is today, and the nearest date of the developer with respect to the customer maybe 2 days down the line or 1 day before that. That value they need to consider, multiply by the area remain unsold, and multiply by 5%. Okay, 5% or 1%, whichever rate is applicable. Now, A or B, whichever value is lower, that value the developer is supposed to pay GST under reverse charge. Okay. Now, in nutshell, if you see the GST implication on that, it is a conditional as far as development rights are concerned, and most importantly, it has been shifted to the developer. Landlord is not supposed to pay any GST as far as development rights are concerned. Conditional exemption only qua residential apartment and subject to the residential apartment sold pre-OC, which has been discussed. Rate, it is 18%. Okay. Responsibility is on developer, it is under reverse charge. Valuation, which we have just discussed, value of similar apartment sold nearest to the date of transfer of DR. Value capping would be capping of 5% or 1% of the value of area remain unsold based on the market value on the date of OC. The intention behind that is overall GST qua that project should not be 5% or 1% of the agreement value. Okay. If it is more than that, uh, then TDR should be payable only to the extent of 5% or 1% of the inventory unsold. If it is less than that, then it has to be 18% of the value of the TDR. Okay. Now, what would be the time of payment? There was a lot of ambiguity with respect to the time of payment pre 1st April 2019, pre GST. When should I pay GST? Continuous supply of service? Should I pay at the time of completion? Should I pay at the time of allotment? Now, in both the scenario, from the developer perspective and from the development writer perspective as well, the time of payment would be on a receipt of OC. OC means occupancy certificate, or before receipt of OC. The reason for that is otherwise the landowner is not eligible to avail the credit if they sell their flats under construction to the respective flat owners. That is the reason authorities have considered the practical difficulties of the industry, and on June 2nd, 2021, they had issued this notification, and they have stated that even if they pay the GST before receipt of OC, that is fine, but post receipt of OC, if they pay any GST, then interest and the interest applicability would definitely be available. ITC, as you are aware, and we have been discussing since long, that ITC is not applicable as far as these projects are concerned. Now, transaction 2 is concerned. This is transaction 1, that is transfer of development right by society to the developer. What would be the value, at what rate, when they are supposed to pay, so on and so forth. Now, second aspect of the transaction is works contract by contractor to the developer, because as I mentioned, that developer generally don't develop this activity or don't construct on their own. They subcontract this activity to the subcontractor. Then what would be the GST implication with respect to that? Most importantly, post 18 July 2022 or 13 July 2022, these entries has been deleted. Subcontractor generally was liable to pay GST at 18%, but under these schemes, they were supposed to pay GST only at 12%. Now, post this amendment, they are supposed to pay GST at 18%. No 12% GST rate is applicable for contractors. Okay. We should be very, very careful. We should be very, very clear on this. Contractors now are supposed to charge GST at the rate of 12%. Okay. Now, this is as far as a value, of course, the contractual value which has been decided between the contractor and developer. As such, there is no notional value. There is no barter transaction between developer as well as contractor. So, the transaction value which has been agreed between contractor and developer, on that value, they are supposed to pay GST at 18%. And in terms of, as it is a continuous supply of service, so the point of taxation would be in line with the milestone provided under the contract. On those milestone, the contractors are supposed to charge GST. Okay. Now, the third leg of transaction, which is sale of apartment to a new buyers. Okay. Now we have understood first leg of transaction as far as society redevelopment are concerned. Second leg of transaction, we have understood what are the GST implication. We tried to understood over the period of time. Now third leg of transaction, which is developer is selling flats to the new buyers. Okay. Now here again, two important aspects which has been provided under the law, which can the developer can develop two project, maybe real estate project or residential real estate project. This has been defined under the law. That in consultant language, it is REP and it is RREP. Okay. Now we need to understand very, very important as far as applicability of rates are concerned. That is the reason they have divided this project under two aspects. If the project falls under the residential real estate project, that is RREP. Now, what is the condition for that? The carpet, because when you see any project, there might be possibility that the project is having residential as well as commercial uh, offices as well, or commercial shops as well, right? Then what rate should be applicable with respect to this project? When the commercial apartment is not more than 15% of the total carpet area that we need to identify this, then those project falls under the definition of RREP. Okay. As far as residential is concerned, the rate remains the same, be it 5% or be it 1%. But as far as commercial rates are concerned, these definitions are very, very important. If it is more than 15%, then the project falls under real estate project. Okay. Now, if the commercial apartment is up to 15%, then as we discuss, the project status is RREP. Okay. Now, the rate on sale of such commercial units would not be 12%. 18% less land deduction I'm talking about. So it would not be 12%. The rate would be applicable as a rate would be applicable as 5%. And ITC with respect to that would not be available to the developer. That is the reason I have explained this REP concept and RREP concept. If it is more than 15%, okay, then most importantly, commercial unit rate would be 12%. And additional work for all of us, proportionate credit would be applicable. Okay. Now, how we should calculate this proportionate credit? There is no mechanism provided per se under the law, but based on the area, we can very well calculate the proportionate cost, and accordingly we can very well avail the proportionate credit. Now, if you see overall rate for GST with respect to this builder when they are selling it to the new buyer, if it is residential, be it RREP or be it REP, okay, irrespective of the area qua commercial apartment, here there is a bifurcation with respect to less than 90 square meter. If the carpet area of the apartment is less than 90 square meter and prices of the flats are less than 45 lakhs, then rate would be 1%. If it is greater than 45 lakhs, even though the area is less than 90 square meter, the rate would be 5%. Okay. Now, if other than Pune, if it is Mumbai or other area, if it is greater than 60 or less than 45 lakhs, then in that scenario, the rate applicable would be 5% as far as GST rate are concerned. But as far as commercial rates are concerned, the rate would be, if it is RREP, as I have explained in my earlier slide, the rate would be 5%, even if the residential rate is applicable as 1%, but the commercial rate would be applicable as 5% with no ITC. Even if the residential rate is applicable for 5%, project falls under REP, commercial rate would be applicable at 12% with ITC. So this is as far as transaction 3 is concerned. In case of society redevelopments, developer when they are selling it to new buyers, most important aspect is transaction 4 when they are selling it to the society, or when they are giving it, when they are not selling is not the right nomenclature, when they are handing it over to the society, the flats. Okay. Now, if you see on a lighter note, if I am the society member, okay, and if I need to take the benefit, or if the builder is providing me flats under this redevelopment scheme, then there is a discussion between husband and wife that even though they are not supposed to pay any value or any amount qua purchase of uh, flat or qua purchase of home, but they need to pay value with respect to the tax. So इसलिए जीएसटी उन लोगों के लिए क्या है, घर से बड़ा टैक्स. Okay. And at the same time, when the husband is discussing with the wife that "Ki arey, the bank just approved our home loan, so wife is like, now great, now we can pay GST to the to the developer. So this is on the lighter note, but as far as applicability of GST is concerned, qua society is, of course, GST is applicable, and the rate would be as equivalent to as they are selling it to the new buyers, be it 5% or be it 1%, as the case may be. Responsibility, of course, lies on the developer under forward charge. Valuation, you would be surprised that valuation would be the similar apartment which is sold nearest to the date of transfer of DR. Okay, so as I has maybe 10,000 rupees per square feet or 12,000 rupees per square feet, whatever rates are going on based on the area, maybe 15,000 square feet, on that rate, developer is supposed to pay GST, be it 5% or be it 1%. What would be the time of payment? Uh, in tax period, not later than the tax period in which OC is received. That's what we discussed as well. Uh, they can they can pay GST on or before OC, but not later than after obtaining occupancy certificate. ITC, here it is not available, but we had some thoughts with respect to ITC is concerned. Now, if you see the overall transaction as far as society redevelopment is concerned, uh, and that too specifically when the developer is handing over the flat to to the society owners or to the members, what is happening? Transaction 1 and 4 is getting subsumed in transaction 3. Okay, what is transaction 1 and what is transaction 4? Transaction 1 is transfer of development right. Transaction 3 is they are selling it to the respective flat owner, and if you see, they are getting subsumed in transaction 4. What I mean to say here is that the tax liability per se is discharged on gross amount charge, which subsumes all costs including value of units handed over to society. The purpose of transaction 1 and 4 subsumed in transaction 3, the logic behind that is when developer is constructing the building, okay, and when they are selling these flats to the new flat owner, at that point of time, okay, they are considering all the construction cost. A. B. Whatever amount they are receiving qua this project, on total value they are paying GST, right? The reason for that is they are not receiving any amount from the society members. They are considering this as a cost, and total transaction value which has been recovered from the new flat owner, on total value the tax has already been paid. If the authorities are asking tax even from the society, from the flats which has been handed over to society owner or to the members, then is it not a tantamount to a double taxation if you think logically and rationally? Because on that value builder has already paid the tax. Further, it is worsened by no ITC, stamp duty on DA and development agreement, and sale resulting into multiple taxation. So if you see how many taxes has been levied in overall transactions. So when we have seen this pain area of the developer, we had filed some representation. whether they will consider that, not consider that, but definitely they are under consideration, that unit handed over to members should not be subject to GST, A, because of the double taxation. And the genesis of GST is to avoid the double taxation, as you are aware of that. And second, even if you are leaving GST, then at least if you see, the credit should be available of whatever GST I am paying on the flat which has been handed over to the society members. The reason for that is, effectively it is a captive consumption for me, right? Because I am constructing that, I am handing over it to the society members. I am considering all these construction costs, I am absorbing those costs, right? And effectively it is an input cost to me, and they should allow us as an ITC as far as these transactions are concerned. So m- may not be availability of ITC, they may or may not consider that, but definitely as far as exemption for the flats which has been handed over to the society owners, they may consider. The reason for that is, on the total value already GST, stamp duty, all has been paid by the developer, and government has appropriately received received the revenues from the respective assessees. Now, if this is the one aspect of doing society redevelopment. Second, there might be possibility that there are few societies which I have been observing that they are appointing developer, they are appointing project consultant, they are appointing constructor, they are appointing contractor. They themselves are doing redevelopment activity, and instead of giving the development right, they are only giving the construction contract to the developer or to the contractor for that matter, and they are handing over flat in new buildings. Okay. And at the same time, uh, either they will hand it over to the members or they will sell it to the new customer. This is also happening. GST implications remain the same as the developer, as we have seen, the applicability with respect to the developers are concerned. But in this sort of a scenario, what positions uh, what position builders have taken, that when the society themselves are constructing these flats and handing it over to the members, they are not paying any sort of a GST on this. Okay. But as far as sale of flats are concerned to the customers, they are paying GST, be it with respect to 5 or 1%. So department may dispute that there is a supply of service from society to members, and GST may be applicable for this sort of a services. So another litigation, another interpretation issue which we need to see, um, which we need to see over the period of time. But when we are advising it to the client, when we are doing this sort of a structuring, we should be ultra careful, and we should highlight all this applicability of GST and all this interpretation which can be taken by the department for this sort of an activity are concerned. Okay. Now, if you see the overall comparison with respect to self redevelopment or redevelopment, what are the activities and what are the responsibilities generally if you see in self redevelopment and redevelopment? A, self redevelopment, it is under the supervision of society members. Okay. But as far as redevelopment are concerned, it is under the supervision of developers. Most importantly, in case of society redevelopment, self redevelopment, property rights remain with the society. However, with respect to redevelopment, development rights has been given to the developer. Okay. That is the reason applicability of development GST on TDR comes into picture. Point number 3, no power of authority in favor of the developer. Power of authority, otherwise development agreement, is to be executed and registered under the Registration Act. What are the implications with respect to this? GST paid to the contractor is cost, but GST paid to the as far as flats handed over to the society member, societies have taken not to pay GST on that. That can be to that extent a saving. But as far as society redevelopment by builders are concerned, GST paid to the contractor as well as payable on construction services, definitely a cost to the developer. Okay. Now, this is as far as society redevelopments are concerned, and possibility of the transactions, be it self redevelopment or be it with respect to redevelopment, are concerned. So JDA, I think we have discussed much, almost in every of my presentation. I have touched upon this transfer of development right, then monetary consideration, non-monetary consideration, sale of apartment, then developer gives pre-OC, post-OC. uh, if I don't think again repetition of those provision is the need of an hour, because it's been 5 years we have been discussing the same aspects and same transactions again and again. But we can in nutshell very well brush upon the taxability is concerned. Earlier there was a applicability of GST on landowner, developer. Now overall responsibility is on developer. Two important transaction: one is transfer of development rights by landowner to developer, and second, area provided by developer to the landowner, that is the construction services. As far as applicability of GST is concerned, we have discussed in this detail: conditional exemption 18%, developer, similar value of the land, it is applicable at the time OC or prior to that as well. No credit is available. As far as landowner is concerned, the difference is the credit is available to the extent sold pre-OC only to the landowner promoter. That is the reason this amendment has been undertaken in 2020-21, that they can levy GST, developer can levy GST even pre-OC. Otherwise, after OC, if they levy GST, landowner, it's effectively on the paper they are eligible to avail the credit, but against on what value, because post OC there is no GST applicability, against what levy the landowner will can offset this sort of a credit. That is the reason this sort of an amendment took place. uh, Most importantly, if developer is opting for 5% or 1%, same should be applicable, same should be applicable for the landowner as well. Okay. And landowner does not have an option to go for the different sort of a scheme. This is the most important clarifications which they have given over the period of time. Now, as far as JDA commercial development is concerned, there is always an ambiguity, or there is always a confusion, not an ambiguity, that who is supposed to pay GST on development right when it is of a commercial nature, be it commercial, be it residential. The responsibility lies on the developer. Uh, as far as construction services provided by developer to the landowner, they are supposed to charge GST at the rate of 12%, and that too under forward charge. The valuation mechanism, time of payment, credit availability, all remains the same as far as commercial apartments are concerned. Last bit of my presentation is of commercial development for lease, which is a very detrimental as far as all this leasing business are concerned. Whenever they are paying GST on the input side, on the output side, they are not supposed to avail the credit, uh, be it with respect to construction cost, qua civil work, qua utilities, that is overall total cost is there as far as uh, applicability of GST is concerned, and availment of credit is concerned. Here, most importantly, why the credit restrictions has been there, and where all of us as a fraternity can play an important role uh, from the builder perspective. that even though credit is not available under section 17.5 because of the reason that the construction is on his own account, as well as 17.5d talks about goods and services received by a taxable person for construction of an immovable property on his own account, including when such goods or services or both are used in the course or furtherance of business. But here there is an exception, which has specifically written in green color, which is other than plant and machinery. In that scenario, even though it is even though it is resulting into an immovable property, even though it is on his own account, the credit is available. That's where we as a consultant plays an important role, and we should identify under plant and machinery which are the products which falls under this, and the companies can very well avail the credit. They have defined the definition of plant and machinery. Accordingly, all of us should do this sort of an activity and identify which credit should be available. So goods falling into one of the categories may qualify as plant and machinery, be it apparatus, be it equipment, be it machinery. Which are the example with respect to this? Okay, be it lifts, be it chillers, be it transformers, be it crane. You can say this falls under the equipment. This may falls under the machinery, HVAC, whatever GST you are paying on this, even if it is used for your leasing or this sort of a business, uh, mall or commercial offices, the builders are eligible to avail the credit. Having said that, all these provisions, there was a landmark judgment which is pending before the Supreme Court uh, of uh, of Safari Retreat, which has been pronounced by Honorable High Court, where the facts of the case was the petitioner was engaged in the business of construction of shopping malls, and they have allowed that credit, even though there is a restriction provided under the 17.5d. And the Honorable High Court, what they have considered the rationale for giving this sort of a relief is that they have stated that cannot be held as using the property on his own account. They have stated that you should not read this property, or you should not treat this property or activity that they have done on his own account. And at the same time, there should not be any break in tax chain, and hence the said denial of ITC cannot be applied. So if you see the 17.5, uh, it is a narrow and restricted interpretation, and it defeats the overall purpose of GST, where the purpose is to have a robust credit, and there should be uh, the credit should be available across the chain, and there should not be any break as far as availability of credit is concerned. That is the reason our honorable finance minister as well, they are removing all the exemptions uh, as far as GSTs are concerned from the exemption list, so that there should not be any break per se in the tax system. Having said that, there are some industries, some transactions where the exemption still continues. The difficulties are different as compared to the overall purpose of implementation of GSTs are concerned. Based on this rationales, High Court has given this favorable ruling, but according to us, this is a slightly aggressive position. So whenever we are advising to the client, uh, even if they are availing the credit, we should highlight that this may or may not uh, upheld by the Supreme Court. And if the Supreme Court ruling goes against the assessees, then interest and penal consequences would be there, and definitely that would take uh, you know uh, substantial amount of time. So interest and penal consequences, there would be a cascading effect with respect to that. That's all with respect to real estate, JDA, SRA, and availability of credits are concerned. Thank you so much for your patience hearing. It's always pleasure talking to all of you guys, and at the same time, at the dais of Pune branch of WIRC, it's indeed a pleasure and a privilege to talk to all of you people. Thank you so much.
Thank you, sir.
Before we address Q&A, maybe for 5-10 minutes, can I take a bio break for a minute?
Yes, sir, sure,
if you
sir.
guys allow.
Yes,
Thank you
yes,
so much.
surely. On this Saturday, that is 27th of August, from 10 a.m. to 12 p.m., we are keeping a seminar on physical aspects of statutory audit, documentation to reporting obligations. So I would request all of you, it is a live seminar at Pune branch of WRC. So the registrations are open, and even we have live registrations for the same from 9:30 a.m. onwards. So you can reach out to Pune branch and you can register for the said session. As you know, audit peak season is coming up. So because of that, we have planned to keep this particular session. So please be tuned, and I hope all of you come there for this particular session. And apart from that, I've already announced to you that tomorrow's session, that is on 25th, the session was scheduled for zero rated supply goods, but that particular session will be conducted on 26th of August. And on 26th of August, the session which was there on precautions and implications before the closure of books of accounts, that session will be conducted tomorrow, that is on 25th. So we have just rescheduled both the days. So keep a note of it. Yes.
Yeah, sorry.
So are we good to take few questions?
Yeah, we have few minutes. We can
Yeah.
address couple of
So
questions, and if otherwise as well, if people can directly approach me or they can email it to on my mail ID, I can personally replies to their queries as well.
sure thing. So one question: whether society who is registered under GST law to issue tax notice on development rights, and when should the same be issued?
And sorry, come again.
Whether society who is registered under GST is able to issue tax invoice on development rights, and when they can issue the tax invoice.
Development rights applicability of GST lies on the developer, not on the society.
Okay.
It's always under reverse charge mechanism.
Okay. Whether landowner is eligible to claim credit paid by the developer where the services are not provided the same by the in full by the developer.
Whether landowner is eligible to avail the credit
Paid by the developer.
Paid by the developer when they levy GST on that,
Yes.
right?
Yep.
Of course, only that exception is available to the landowner and not otherwise.
Okay.
Otherwise, if they restrict that credit, then effectively the GST rate to the flat owners or to the customers who are buying from the landowner, which would be much higher as compared to when you are buying it from the builder.
So in case of JDA entered after 1st of April 2019, if the ratio in the ratio of 50:50, should the landowner collect the GST on sale of flat post OC and the developer should pay the same, or the developer should bill for construction services to the landowner and the GST should be collected and paid by the landowner?
See, whenever there is an agreement between landowner and developer, okay, it is always treated as an under construction sale. The reason for that is the consideration developer has already received, that is in the form of development right. Okay, the only point of taxation has been deferred up to post OC.
Okay. What is the implication of notification number 3/2019 state tax rate number 552 dated 29th of March 2019?
I don't remember the rate of notification. If you can say what the notification says, then I can very well
Okay.
explain. Or you can mail me. I'll definitely reply it back to you.
Sure thing. And one last question is: a landowner sells development rights on stock sharing arrangement with developer. The landowner is supposed to purchase all the TDR for the project. Whether the landowner is liable to RCM on TDR purchase, or is the developer liable? If yes, what would be the value?
value we have already discussed. That value would be equivalent to the first sale of apartment. Okay, proportionately they need to consider that. Now, if the landowner is buying it from the municipal corporation, okay, or from the local authorities, then there is an exemption entry provided under the act. Okay, and if they are buying it from the third party, then in that scenario there is an ambiguity to that extent, but people may take a view that effectively developer is using for the purpose of residential purpose, then accordingly residential then developer should consider that TDR value, and at the time of OC, whichever is post OC remain flat, proportionately they can pay the tax.
And so one last question, can you just give few insights about the implication on self redevelopment by societies, which is right now coming by most of the societies, they are developing on their own.
That's what I've already explained in detail.
Okay, the person has given the query right now, so
Already
yes.
explained in detail. When that is the reason, I have specifically highlighted this slide or prepared this slide, where society themselves are handing over flat to the new building, to the society members. There are two interpretation which is going on. One, when they are giving it to member themselves, people have taken the stand no GST is applicable, because provider and receiver both are same. There are no two parties as such. That can be one of the interpretation, but department can definitely take a stand because these are the related party, and there might be a possibility of GST on that. As far as sale of flats by society is concerned, they need to take GST registration, and whatever pre and post GST applicability rates are concerned, post OC they are not supposed to pay GST. Pre OC either 1% or 5%, depending upon the applicability of rate qua their project, they should pay GST on that. As far as availment of credit, no credit is available.
Okay, perfect. So yes, for any other queries, if you feel, you can definitely reach out to sir, and sir would be sharing his email ID in the chat window. So yes, it was really great, sir. Your session was enlightening, and we thank you for taking out your valuable time. Before handing over to Ajinkya sir for the vote of thanks, I'll quickly make one announcement that it is mandatory for all of you to submit the feedback and the MCQs after the session through the portal of learning, ICI learning portal. So make sure that you are giving the feedback and you are even answering to the MCQs. Very basic MCQs have been asked post session. So make sure you go there and you submit your feedback without fail. And see you all tomorrow, day after tomorrow, and even on Saturday for the live session at Pune branch. Now I would request Ajinkya sir to kindly give the word of thanks. Over to you, sir.
Thank you, Pranav. I extend my thanks from the Pune branch of WSF ICI to CA Vivek Baj for sparing his valuable time. In spite of being unwell, he has given today's lecture, and I guess all queries and issues must have been solved. So then, thank you everyone for attending today's seminar, and then see you tomorrow at 5. Thank you. We can conclude the session now, Pranav. Vivek?
Yes.
Hello.
Yes, sir.
Yeah, thank you all.
Yeah, thank you.
Yeah, bye.
Bye bye. Take care.